are live now. I think we're going live to Facebook. So let's get this show on the road, everybody. So I want to say good morning or good afternoon to you all, whether you're joining us from Facebook or from Zoom. And depending on where you are, I know it's still morning in Queensland and WA and SA, but you know, it's just gone afternoon here, and I'm not even sure whether it's good, but we're all here, and you know, like, while we're all here, we've got a lot to be grateful for. And I know this is a very unique experience for all of us. I've never heard the word, in all my years of writing, all my years of journalism, I've never heard the word unprecedented used so many times by so many of the big papers, and we're all kind of navigating this uncertainty together. And like you guys, we at Elite Agent, we are pivoting as well. So you know, we want to bring you the most useful advice we can right now on the coronavirus crisis and how it's impacting real estate agents. It has been a harrowing news cycle, so you know, we want to do everything that we possibly can to support you. So today, obviously, we're bringing you Elite Agent regular John Knight, and you hear from John regularly in the magazine. And he's, for those of you that know John, know that he's not your average accountant. He is an accountant, but look at him, he's sitting there in a t-shirt, in his work from home office, ready to go into battle and ready to help. So today we're going to be talking about three things. And I can tell you now, our website has been smashed on the government regulations and what's going on. So hopefully we're going to expand on that for you. So the big thing for me, the big thing that I'm seeing is what happens if landlords and sellers press pause. What does that mean for your business, and how can you improve your break-even point and make your business more resilient? Because, you know, tough times don't always last, but tough people do. So, you know, like, we kind of want to work on building you guys up. The government relief packages. So firstly, there was the first one last week, and then the second one on Sunday. Talked a lot about businesses and things like that, but didn't talk a lot about sole traders, contractors, things like that, of which we know that there is a lot of those types of workers in the real estate industry. And thirdly, you know, there are some things that are within your control. There are some things outside your control. And John and I are going to talk a little bit about those things and how you can pivot and get creative. Now, for those of you that are watching on the live stream, please put that's a Facebook live stream, please put any questions in the comments box. And for those of you watching Zoom, please put them in the chat box. So we've got Mark here. Mark, can you please raise your hand so that everyone knows that you're here? So he's going to be taking down questions, and we're going to be taking questions for John at the end. So as I mentioned, John is a qualified accountant and business strategist, and he's been doing this for years and years and years. But I just want to give a quick disclaimer as well, is that, you know, like, everyone needs to seek their own advice at this point in time. And I'm sure, John, if you want to contact Business Depot, you can do that.
Absolutely.
If you've got any questions about any of these sorts of things, we'll try and deal with them offline as well. But, you know, it's always good to get some of your own advice based on your own personal circumstances. So after all that.
And I might just add to that, Sam, we are still sort of giving advice based on media releases and sort of just these television announcements at the moment. We do have some legislation now, but generally we're still flying a little bit blind ourselves. So you have to keep live, I suppose, the advice.
Yeah, exactly. And it could change at any moment. And like we saw on Sunday, I spent most of Sunday just writing because things were changing that quickly. But okay, so John, welcome. Thank you for joining us.
Thank you. Thanks for having me.
What is the word on the street for you right now? Like, last night I saw you leave the office. You looked exhausted. So what are some of the things that your clients are telling you right now?
Yeah, well, I mean, we work across a whole range of sectors. Real estate is obviously a sweet spot for us. But, you know, last night when I walked out of the office, and we work in Brisbane in an area where there's a lot of coffee shops and a lot of restaurants and a lot of retail. Now, it was an eerie feeling on the streets yesterday in James Street. And the eerie feeling, someone said they compared it to after September 11. There were restaurants that had closed their doors, not knowing whether they were going to open again. There was a huge number of people that were sacked within the area. So we're seeing these businesses now being impacted in the hospitality, in the fitness, the cafes, and all these other sort of areas. And these are the ones that pay your rent to your landlords through your trust account in property management, isn't it? So we are going to start to feel that. From a real estate specific perspective, though, we've got to find this fine line between remaining optimistic and knowing that this will come to an end, and also not burying our head in the sand on the reality and doing everything that we can possibly do to protect our business and protect our team and our families right now. I'm still having real estate agents who said Saturday was good. They had good people through open houses. They're still getting contracts away. They're not having a whole heap of people just pull out, although some are starting to see people pull out of contracts. And so from a real estate perspective, I would say the word on the street is we're not feeling it yet.
Yeah. I was going to say, like, you know, like it's very much still the momentum of pre-Christmas activity that is kind of coming through here with the end of those marketing campaigns and stuff like that.
Yeah, and a lot of people were feeling optimism up until this point in time. You know, a lot of the data I've seen, a lot of the graphs for some of the businesses we work with, they were all showing good numbers through open houses and good prices and that type of thing. But the thing with real estate is you don't really feel it until much further down the line.
Yeah.
You know, with the sales sort of side of things, you've already got unsettled commission or unconditional commissions that are still coming through. And so you're not going to feel it from a cash flow perspective for probably a month. But the month after that and the month after that are the ones that I worry about for the real estate industry.
Yeah, so now's not the time to do the ostrich thing, right? And bury your head in the sand. Now's the time to sort of start looking at where we can, you know, where we can wriggle around to prepare ourselves for the next few months.
The industry's getting a heads up. You know, it's getting advanced warning.
We're lucky.
We're lucky. Whereas you imagine, you know, operating the local restaurant or something or other and just being told, done.
Yeah. And I guess, you know, like, again, lucky from the point of view that, you know, real estate agents can still operate for now. But I think, you know, like based on the news that we saw on Sunday, you know, with Bondi, like I think real estate agents are going to have to be particularly vigilant, you know, in things like auctions and stuff maybe happening in the upcoming weekend to not draw attention to, you know, that sort of thing, and to make sure that everyone keeps their distance. Otherwise, you know, that will be the quickest way to shut down.
Well, and we're already seeing that in the property management side of things, aren't we? You know, people not being able to do inspections and those types of things. So I can't see how there'll be too many open houses this Saturday, you know, with huge numbers at them. It's time to embrace the technology for those things to try and keep things moving.
Yeah, absolutely. All right, so let's look at some of the practical things. Let's just get straight into it. You know, some of the practical levers that people can pull right now in their businesses. So the first one I want to attack is one that you actually wrote an article on recently about finding your break-even point, like most important number in your business. So, so first of all, why is that so important, and how do you get to the guts of that really quickly?
And this is the one thing we do for businesses when they first contact us, when they're feeling a bit of strife or feeling a bit of pressure. So the first thing we'll do is we'll calculate their break-even point. Now, your break-even point is typically measured by the sales income you need in a month to meet all of your expenses for the month. Just think of it that way. And what I typically do is I will include your property management income as a contra to your fixed costs, because really only the sales is the variable sort of component of it. So once you work out what your break-even point is, that gives you a benchmark or a place to start in the discussion. So when we know that you need to have, I don't know, 100 grand's worth of commission coming in just to pay your expenses every month, you therefore can attack it from a sanity checking sort of perspective, I suppose, to say, well, how reasonable is it I'm going to be able to get 100 grand in? Am I going to need each agent to do X sales, or what does it look like? And typically what happens in times like this is we then go, well, we need to reduce that. So how can we reduce that break-even point? The tip, though, is your profit break-even, which is the classic break-even, is often very different to your cash break-even. So a cash break-even also takes into account things like your loan repayments that you need to do, any drawings that you need to take out just to live at home, or school fees and different expenses like that as well. So that is the first thing I would do in a business, is calculate your break-even point. How much do you need to earn every month just to pay your expenses?
Yeah, just to get up and put your feet on the floor and get out the door.
And I often use the analogy that when you know your break-even point, you then know when during the month you've reached it or haven't reached it. So if you reach it 2 weeks in, then great. You've got 2 weeks to make profit. That's when you go hard. We're going to sort of have to change our thinking a little bit like that, because we might quite possibly will be below break-even in some businesses. And so how do we minimize that? And so by knowing the drivers of our break even, we know the drivers of our profitability, and therefore we know the levers that we can pull.
Yeah. So let's go with another lever, which is cutting costs. So we're like, and I remember we did a podcast a couple of years ago where, you know, you didn't want to be labeled with that bean counter, let's just slash and burn stuff. And I completely understand that. But for the guys that haven't listened to your philosophy on costs, can you tell us what are the things that you would be looking at right now?
Yeah. So as you say, I will never be the bean counter that stands up here and says cut costs, cut costs, cut costs. That's not my style. Good costs can be good if they're achieving your strategy. So they just have to be linked to your strategy. What I don't like is I don't like costs where you don't get value out of them. I don't like costs that are a waste. And so when I look at costs, and you know, the easiest way to reduce your break-even point is reduce your fixed costs. So you're going to run through all your costs. Now, I did it for my business on Saturday. I sat down and I got my whole P&L year to date, and I went through every single account and looked at every single subscription, every single expense item to see whether I was getting value out of them or whether there was some room to move on that. So the big levers in real estate, of course, are your wages, aren't they? And when we look at your wages, you're obviously going to have your fixed wages, your property managers, your admin staff, those types of people. And you're going to have your variable wages, which are really your commission people. Of course, there's a new sort of perspective on that now as well, with our minimum sort of wage requirements for the commission-only agents as well with the awards. So we've got to probably look at those sales agents of, well, what if they don't sell anything? What are we going to have to pay them? So you don't have to be a slash and burn sort of situation though. We can just think about, well, how do we keep these people on our team, pay them something, maybe not the full amount that they've got. Maybe people go on leave. Maybe they go on leave without pay for a period of time. Or what a lot of people are doing is they might be temporarily reducing their wages by 20% or turning them into 3-day-a-week sort of employees as we go through this time. And I think that's really important for the culture of your business. So if you've got a very strong family culture within your business, then it's not the time to desert your team, is it? It's the time to wrap our arms around each other and ask them to help us as much as we help them. Subscriptions is the other big one I always harp on for people to look at. What subscriptions are you using? Of course, rents, they're a bit harder to get out, but ask for a deferral or ask for some room to move on your rents. And the other one I always harp on about as well is your advertising. If you're not getting your advertising from your vendors up front, that means you're funding it. Maybe even your advertising providers are able to provide some deferral or some relief for a period of time. Can I just add one more thing though, Sam? Other than just looking at your costs, the other things to do is actually look at your income, and in particular your property management income. You know, this can be a time where property management becomes more important for your business. You know, is it time to actually buy a rent roll? Is it time to actually grow the rent roll and focus on growing the rent roll so that you've got more fixed income coming through the door?
Well, that was actually about to be my next question, which is, are there any places? No, that's all right. Are there any? And sorry, guys, just a reminder too. If you have any questions for John, pop them in that chat box, and we'll pick up on them towards the end of this webinar. But are there any other places that you think revenue can be increased, like during this time?
Yeah, I mean, it's hard, especially in the sales sort of side of things, isn't it? Like on the sales side of things, you've got to get your listing and, you know, the commission sort of structures. Property management, you know, we're going to have our income in property management challenged with people not paying their rents. You know, we are going to have people who can't afford to pay their rents. And so landlords are going to be asked to give some room to move. And so that's a challenge. And so the biggest thing I would say is, what about other charges that you haven't been recovering? You know, maybe it's other rent rolls that you can add into the mix. I'm a big fan of adjacent services, but I don't think that's our focus for now.
Yeah, I think that's what you would call a squirrel right now, isn't it?
Yeah, we need focus. You've
Yeah.
heard me talk about squirrels before, Sam, and in business we have so many squirrels that come into our headspace, into our office. I always use the analogy, they hang from the ceilings, they sit on your shoulders, and what you don't need at the moment are squirrels. What you
Yeah.
need is you need focus, and your focus just needs to be surviving this blip so that we're strong when we get out the other side.
Yeah, I will say, actually, we rent our home up the road. We own our commercial property, but we got an email from our property manager just yesterday, Mark and I, saying, like if you're like I'm happy to post it, in Humans of Real Estate or something like that. I think there was some good stuff about that email, and I think there was some not so good stuff about that email. So, obviously being from a lead agent, we've never missed a rent payment in our lives, but there was this bit on the end of it where perhaps they could have segmented their list to say, to leave out the bit that says, by the way, your rent's due. After they've given us a nice big rundown of,
how they're going to help,
experiencing difficulties and how you're going to help, but by the way, pay your rent.
Yeah.
I think it's really important to talk to people in a segmented way right now, because you might have tenants out there that are kind of like us that will, walk over hot coals to, pay rent and things. But then, you're going to have people that are going to be in hardship.
That's the human element of this, isn't it?
Yeah.
You've got so many parties, and so much of this pain is going to be pushed down the line.
Yeah.
And so, you've got landlords, you've got tenants, you've got buyers, you've got vendors, you've got your team. And everyone is going to deal with some stresses differently. Some might have financial stress, some might have health stress. Some might be not able to talk to their grandpa in the old age home or something or other anymore.
Yeah.
And so we've got to take that human element into account here, but it's actually a really good opportunity for your brands to be very authentic and very real from a helpful perspective.
Yeah, someone's just asked a question. Craig has just asked a question on rent relief, the proposed law rent relief. We haven't heard anything on that other than REWA are leading that. And what we're hoping is, this is why we've organised a second webinar with Hannah Gill on Thursday, and we've also I've also got on hold John Gilmovich, who's the head of the Property Investors Association of Australia. So we're hoping that the government will announce something about that by Thursday. Meanwhile, I think register for that webinar, because Hannah will be on top of all of that, and that's something else that we hope to be bringing you on Thursday. But I think the implications are widespread. So we've seen in the UK, they're sort of saying that tenants can't be evicted. They're saying in New York tenants can't be evicted, but they're also doing things on the other side, which is suspending mortgage payments and things like that. And at the moment it's in the hands of the states. And as soon as as soon as we know, we'll hopefully be including that content in Thursday's webinar. So if you haven't registered for that one, hop on that one.
Yeah, we'll constantly be updating our blog as well, Sam. So if ever you need an extra add-on, we'll be constantly updating that with new things. You mentioned they're the banks. They've all announced their assistance packages now as well. Or most of them have announced their assistance packages as well. And they're a very important part of this equation, because if you don't have to make your loan repayments for 6 months, whether it be your home loan or your business loan, then obviously that reduces your break-even point quite considerably as well for many of you out there.
Yeah, absolutely. Okay, let's talk debtors and creditors. And I want to, so obviously this is your receivables and your payments. How can we tweak those? And then I want to talk about the tax office as a possible debtor, because they're doing some stuff at the moment too, right? So let's just talk about debtors and creditors in general. What should we be doing with them right now?
Okay, well, from a debtor perspective, if we think about in your real estate business, your only real debtor, your only real receivable is typically advertising, typically the advertising that people sort of owing in. Usually you get your settlements and so forth through the trust account. Usually that flows pretty well. I don't see that being challenged very much, because it sits in the trust account most of the time. Same for the commission once it gets in there. Obviously, there's an arrears discussion within the property management business and how you manage that arrears. And it's going to be tricky to get that balance between caring enough to give some concessions and making sure they pay their rent so that you get your commission and your landlords get their commission as well. But as for suppliers and creditors, I think everyone's expecting a phone call. Everyone's expecting to be asked if there's any deferral or any mechanism for any reduction. I'm never one who likes someone just coming, hands out asking for money. But if you are reasonable, and what I'm seeing a lot of people do is, for example, with rents, is they might ask, can we get a 50% relaxation for, I don't know, 6 months, and we'll add the equivalent on the end of our lease. Things like that. I think no harm in asking.
Yeah, absolutely. And so the tax office at the moment too, if you happen to have an ATO debt, I've heard anecdotally that if you ring the tax office, they're being super understanding right now.
Super understanding. They've pretty much said they will give leeway on pretty much most debts, pretty much all debts. I still don't think they would tolerate a really bad payer who is obviously just taking advantage of the situation. But we've just had automatic acceptance of deferral arrangements and so forth at the moment. My advice still is to still advise them. Don't just assume, still advise them, and that you will automatically get it, and that'll be flagged in the system for you then.
Yeah, make that call before people smash them like they did the New South Wales government website yesterday.
Yeah. And look, we all need to build as much room to move because we just don't know what's around the corner. The big thing here is the uncertainty and how long this is going to last. And so I'm having conversations with clients where they're saying, well, I can pay the tax office, but maybe I shouldn't pay the tax office because they're effectively saying they'll give me credit for a little while. Maybe I should just leave that in reserve until I have a little bit more of an understanding, or a little bit more of a feeling of what is around the corner.
Yeah. Yeah, and I mean, and that's what we're talking here. We're talking wiggle room to sort of cope with the uncertain side of this. So yeah, for sure.
And unfortunately, we probably all do have to have a look at, do we have money available as a business owner to put back in? Do we have some redraw facilities on our loans? Those types of things that we might need to access if we need to.
Yeah, absolutely. Okay, so now let's talk about the government subsidies. So there were 2 rounds of this, and it took me a while to get my head around them, obviously. But there was round number 1, which sort of dealt with PAYG relief, and then there was round 2, which dealt with a whole lot more. So let's talk about round 1 first. If you're a real estate business with a wages bill, exactly what are you going to get?
Okay, so the revised announcements, and we can't really call them from the stimulus package anymore because it's more like economic support package now. Yeah. The minimum for anyone who qualifies that they will get is $20,000, and the maximum they'll get is $100,000. Now, it's really important that you realise though that is split over 2 periods of time. Essentially, the next quarter is the first half, and the September quarter would be the second half of it. Now, I actually quite like the mechanism that they've used for this, although it does exclude some people within the industry. And the mechanism is this. So at the moment, you pay someone a wage. When you pay that wage, you deduct tax from their wages. And you then have to pay that to the tax office later on in a BAS or an activity statement. What they've said is they will credit you up to 100% of the tax that you've withheld from the wages, up to a maximum of $50,000 for this period and $50,000 for the next quarter. Okay. So the first trigger point for this will be lodgement of your March BAS. Now, there's 2 types of lodgers that will be lodging a BAS. You'll have someone who lodges a BAS and they only do a BAS once a quarter. And you'll have some people who pay their PAYG withholding, the tax deducted, on a monthly basis, but still then lodge a quarterly BAS for the GST. So for example, if you have $10,000 that you normally pay every month for PAYG withholding, when you do your March BAS, you'll effectively get a credit for 3 months of that $10,000. So you'll get a credit of $30,000. And then in the next month, you'll get another 10. And then in May, you'll get another 10 up to the maximum of 50. If you're a big withholder, you will get the whole 50 grand credit on lodgement of your March BAS. Now, one thing we don't know yet is exactly how this will work from a cash perspective. Because obviously when you lodge a BAS, you've actually got a GST liability as well. So will they, depending on the amount of your GST liability, what if your GST is more than the $50,000, and therefore does that mean it's all consumed? Now, that may technically mean you don't actually get a payment in the bank for you, but it does mean the money that you've kept in your bank, being the GST and the tax you've held from your wages, is yours to keep. Okay. So if we follow on with that same example of a $10,000 a month remitter, if they've received the maximum in the June quarter, they will get the maximum again in the September quarter, and they will get that in 4 equal installments from July, August, September, and October. So they can then plan on $12,500. So if you're a big withholder, expect in April to get $50,000. In July, August, September, October, another $12,500 each. Now, if you're a small remitter, obviously the minimum starts to kick in, and the minimum is $20,000 that you get. 10 grand in April and 10 grand over the September period.
So what's the minimum?
$20,000 now.
$20,000 in PAYG wages.
Yeah. And
Okay.
so to get the $20,000, you you'd have to be, you could be withholding less than, I'm just doing the maths in my head really quickly, less than about $2,000 worth of PAYG withholding, and you'll still get the minimum.
Yeah. Okay.
And
So
that'll come in 10 grand in 10 grand in April, and then another 10 grand in the September quarter.
So that's sorry. So let me just go back again. So that's the minimum payment if your PAYG wages are low.
Yes.
What's the minimum payment that you'll get?
10 grand in April and another 10 grand in September. So $20,000 in total.
Okay. So I think the big question for everyone listening probably is, what if you are not a PAYG employer? What if all of your employees are subcontractors or sole traders or their own company?
Yeah, we actually feel at the moment that you might miss out on this provision, but you may be eligible for the other concessions for the payments out of Centrelink, because they've specifically made sure they're available to self-employed people that have either lost their job or had a significant reduction in their income. So they may not get the 20 and 100 amounts, but they may get some other concessions by way of income support. There's a lot of questions we're being asked also for people who don't take a wage for themselves, for example, an independent contractor company, but they take dividends and they take distributions. The way it's worded, yeah, you go.
Yeah, I was going to ask about that. Is there any wiggle room if you've paid yourself dividends versus paying yourself salary?
Well, at the moment, we can't see any wiggle room. So the legislation was passed last night, and they do have a specific clause in there. I was frantically reading it before, which you would expect in all legislation, which is a bit of an anti-avoidance provision, in that you can't do anything that specifically changes or improves your opportunity to get this cash refund. So the way I'm thinking about it is, if you're already registered for PAYG withholding, it's probably worth the shot of processing the wages in March with no guarantee as to how that works. But we absolutely have no certainty around how that's going to be implemented. But I think it's a big gap, and I think it will have to be addressed in later announcements.
Yeah, absolutely. Because, in all of the press conferences I've seen and things like that, like ScoMo's been saying, we want to look after small businesses because they employ everyone. It's just that we don't all employ people via PAYG.
Yeah, and I suppose there's a little bit of a subtext to this, and that is that the government and the ATO never like too many independent contractor arrangements, because often they look at independent contractors as a way to pay less tax, whether it be payroll tax or whatever else. So there is a little bit of a negative cloud over independent contractors from there, and that might be why they've specifically excluded them, but it doesn't mean they won't be considered self-employed for the other income support that's been announced.
Okay, so let's talk about that then, because that was mostly Sunday night's announcement. So tranche 2, what help is available there?
Yeah, so for people who are already receiving some type of support, if they're a job seeker, if they've lost their work, they've basically doubled temporarily the amount that the government will pay by way of Centrelink payments, if that's the right terminology for it. So they've doubled that. I think it's now about $1,100 a fortnight that would be available to anyone who gets that. There's also a once-off $750 payment, which I think will start being paid in April. And they've announced a second $750 in July, I believe it is. Check the facts on the blog and on your content on that, Sam. But obviously, they're just once-off payments to anyone. Just a note on that, though, just because you get the $750 one in April doesn't mean you'll get it in July. They've actually got some slightly different definitions as to who will get that.
Okay. What about the banks at the moment? So the Reserve Bank freed up, well, actually, I can't say that they printed money because that's technically incorrect. But they did, cut interest rates and started, a process of buying government bonds, repo activity we're calling it, which is not repossession activity, but repurchasing activity. So let's get our definitions of repo correct. So what are the banks like? So the banks are offering cheap money to businesses at the moment. That's the bottom line, right?
Yeah, so the RBA, I think I'm just trying to look at the precise number. I think the RBA has made some ridiculous amount of money available, $90 billion available to banks that they will only charge the bank 0.25%. So the idea is to make money cheap so the banks can lend it to us. And so there can be government guaranteed loans. Okay, so they were essentially unsecured loans that the government will support. These loans will be up to $250,000. They'll have a 3-year term on them, and there's no repayments. I believe that's interest and principal in the first 6 months. So they're really just trying to get cheap money out there, and they're sort of distributing it through the bank system. I was talking to a banker just before, and she said that I think tomorrow they will have more around the process to apply for those loans. Now, straight away, I can see people thinking cheap debt, cheap debt, cheap debt. And I think there's 2 ways we can look at that. The first is, what do we need to survive the dip? And if we feel we've hit the bottom, is this an opportunity to help us sort of get out of the dip quicker? Because I think we should look at it. There will come a point where we're going to be a lot more optimistic as to what's around the corner, and it could be an opportunity to sort of scale up or crank up our business as we go through that.
Yeah, or buy a rent roll, as you were just saying earlier. Like,
yeah,
it'd be a good time to, or a good way to. I mean, because even though the money's cheap, you've still got to pay it back.
You still got to pay it back. That's exactly right. And there's nothing. I always say there's only one way to guarantee you to increase your wealth. So if I gave you 100 grand, Sam, and I said, what can you do with it to guarantee it'll increase your wealth? There's not much you can do other than repay debt. And so you've still got to pay that back in the future, and you've got to pay it back from after-tax dollars as well.
Yeah, so we're not talking the Kardashian, like doing this. We're talking doing something, useful with it. That's
absolutely. It's not free money. You got to pay it back sooner or later.
Yeah. All right. So just before we go to questions, there was another thing that I just wanted to ask you about. I guess even before this happened, there was a massive trend towards consolidation in the industry.
Yeah.
From a point of view of pressure on fees and things like that. So is now the time maybe to sort of ignite some of those conversations, maybe with the guy down the road or someone in the next suburb as to how you might work together?
I absolutely think it is, Sam, and the strong get stronger during these times. But I also think about the people who went through the GFC as a business owner and got through the other side, and they've probably had some good times in the last little while, but not great times. From a human perspective, I actually think there's probably a lot of people who don't have the energy for another crisis. Yeah. And I think they might still be in a position, or it might still be wise for them to think about whether they sell. But what I'd be more excited about is some opportunities for mergers, some opportunities to work with the local guy down the road and put a longer term sort of merger plan in place where we help each other by sharing costs. We help each other from a perspective of having more income to meet our costs, and we put a long-term plan in for the exit of one of them if that's what they are wanting to achieve.
Yeah, so now's the time to actually get creative, like to maybe take a little bit of a step back and think about like what it is you want to be doing in the next 30, 60, 90 days and what you want your business to look like.
It's amazing how through a crisis, people can get clarity of what they want to achieve and where they want to go with things. I don't know why it is. Partly, I guess, is just because people have to make decisions quicker, so they follow their gut more. Maybe they don't always make good decisions because they're muddling around in it, and they've just got to be more decisive. But I'm actually really excited by what the industry looks like after this. Like, I actually wonder whether the way we work will ever be the same again. You know, obviously we're all doing webinars more than we've ever done. We're doing more Zooms than we've ever done. We're going to be using more technology to do open houses and inspections and different things. You know, technology for our back-end processes. We're going to be improving our processes quickly because you're not going to have team members putting barriers up to slow it down. Change is happening quickly, and I actually think when we get to the other side, it'll be really interesting to see how it has impacted the industry on a long-term basis.
Yeah, well, I think if I could throw my 2 cents worth in, and guys, if you want to ask some questions, the time would be now. Or if you want us to unmute you and you want to ask John the question yourself, then we're happy to do that. I think we've probably got another 5-10 minutes if you guys are keen for questions. But I do think, like, if I could say a few words on the topic of technology, I think, you know, if anything, you know, what agents need to be thinking about now is not the technology squirrels, because we know that there are plenty of them, but I don't think technology is optional anymore. Like, for anyone that wasn't, you know, thinking about their digital strategy long term, and, you know, things like keeping in touch with clients via email and keeping in touch with, you know, vendors and buyers, and being able to do the digital inspections and the work from home. I mean, I interviewed Dean Mackey last year, and even before this crisis, the whole of their office was able to work from home. The property managers were all working from home. And I sort of think, you know, it is no longer an option. So, John, I've got a question here. On the SME 20 to 100K grant, does the money come back to your bank account, or is it just a credit with the ATO?
What we think will happen, Craig, is that we think the amount, the credit, if that is bigger than the GST bill on the BAS, will create a payment that will come back to you. They're saying they'll pay that back within 14 days. I don't expect that you'll get, you know, for example, the whole 50K in April straight into your bank account. I think you'll find that that'll be offset by GST first before that is paid, but we don't have certainty on that yet either. So we're yet to see clarity on that, but we'll update our blog as we get more information on that. But yeah, they'll pay that back. The other thing we don't know about is if you've got other ATO debts, whether they'll offset it against that yet. I don't think they will, because I think that actually defeats the whole purpose of trying to keep people in employment. But it's just too early to see how they're actually going to do that.
Yeah, good question. And I was actually just about to ask that, like, what if you've got a debt that, you know, and, you know, one would hope that the whole reason that they're putting all this cash into the economy is to keep people afloat.
It's not to clear the ATO debt, that's for sure.
Yeah, at the end of the day. John, I know, like, you run a very big business yourself, and just, guys, any last questions or anything like that, if you could send them through now, and I'll just hit John with another couple of questions while we're chatting away. The Business Depot is quite a big business, and I can see that you're working from home. How important is leadership right now, in terms of where you're, you know, like, keeping everyone's spirits up, like, you know, even though you might be feeling a bit off yourself?
Yeah, I mean, now's the time to shine for leaders, isn't it? I mean, I always talk about the key traits I see in businesses that perform better than others, so the great businesses. And one of the criteria I put on that is strong leadership, because strong leaders create a strong culture. Now, if you've got a strong leader now, to help the team through this, that is absolutely critical. Okay, I always use the analogy, you've heard me say it 1,000 times, probably, Sam. We've got to get everyone on the bus, got to get everyone facing the front, we've got to give them somewhere to drive to, and we've got to have someone at the steering wheel. And that is you, the business owner, the principal, or the leading property manager. It's everybody in the business has a leadership role to play in this process, because everyone reacts differently to change. And so as a leader, you need to be aware of the different personality types. You need to be aware of their stress tolerance or their tolerance for ambiguity, which we're in a very ambiguous sort of situation now with business and roles and so forth. How are they going to react to that? You know, for example, we've always done a lot with personality profiles at Business Depot to help me have self-awareness of my own behaviors and the way I react to things, but also so I can see how other people react. And I think now is the time to really hone in on that emotional intelligence. Because if I know, you know, see myself, for example, I hate the idea of remote working and sitting at home. Like I'll go bonkers, not talking to people. Whereas some others, they're like lapping it up. They're like, oh my God, I wish I could do this all the time. And we've got to drag them into online meetings to connect with us. Everyone's different. So as the leader, we've got to recognize that. We've got to help get the best out of everyone so that bus keeps going down that road in a healthy way.
Yeah, absolutely. Okay, I've got another couple of questions for you from Brad. If I'm currently GST registered but not paying PAYG, are we still eligible for the grant?
Yeah, the PAYG withholding registration is a slightly different registration. So just because you're GST registered doesn't necessarily mean you'd be registered as an employer to deduct PAYG withholding, I'm sorry to say.
Yeah, okay. And another question, can you touch on super getting money? Like, so, you know, we've got access to our super, but what if it's an SMSF? I'm really happy that we have super in an SMSF because I'm looking at the super in the bank and it's just going with the stock market right now.
Yeah, look, so the rules about super, I understand, are just as eligible to self-managed super funds as they are to any other super fund. So the rule being referred to there by Craig is around the ability to access up to $10,000 of your super. So this would probably be really good, especially for those independent contractors or some of those individuals out there that unfortunately may lose their job and those types of things. You can access up to 10 grand, I think it is, before June, and another 10 grand in the quarter after that. I don't think there's too many rules around that, to be completely honest. I think you've just got to register or apply through the MyGov website. Oh yeah, you've got to be unemployed on or after the 1st of January. You were either made redundant or you had your working hours reduced by 20%. This working hours reduced by 20% seems to be an important metric, I suppose, because it's also sole traders whose business was suspended or has had their hours reduced by 20%. And I think it might be relevant if we're doing deals with our team to share the load. I'm wondering whether we need to make sure it's at least 20% so that your team have the ability to access some of these other concessions that use it as a bit of a criteria.
Yeah, just hopefully that answers the question, Brad. Just another question up there too from Peter. So Craig's question on repayment of rent and whether tenants need to pay rent or not, we're hoping to get some clarity around that after the states have once again consulted with the government. And as soon as we know, we will tell you, but we've penciled in a webinar for Thursday with Hannah Gill, where we're hoping we know more by then. But at the moment, we'd just be giving you, you know, information based on assumptions, which we don't want to do.
Yeah, I think the only other comment I'd make on that is I think there has been some countries overseas that have done some stuff around supporting landlords. So I don't know a lot about it, but wonder whether that could be guidance.
Nothing in Australia so far.
Yeah.
Except you know the REIQ and REWA have sort of had a few words for the government to sort of say, well, you know, guys, if tenants are going to get relief on their rent payments, then you've got to give landlords the same sort of relief on the other side, which I think, you know, like in the wash could get quite messy towards the end of it. So they're going to need to get really clear on it. But again, you know, I'm going to use that word unprecedented again. This is unprecedented circumstances. So
and uncertain, and that's the big bit in all of this. You know, where do all these costs pass down to? Someone's got to pay for it sooner or later. Who's left carrying the can?
I think, you know, the thing is with uncertain and unprecedented, I was listening to a podcast where Seth Godin was a guest on it yesterday, and you know, and if this gives you any comfort, it certainly gave me a little bit of comfort yesterday, is that, you know, like we all, you know, like sailors don't get seasick, right? Because they're used to, they expect the ups and downs.
Yeah.
Whereas, you know, us people, when we get in a boat that's all of a sudden starts going like this, we try to make it like we're on land. And the thing is like, you know, if you can get out of your head that we're not, you know, we're not on land, we're in a boat right now that's doing this, you know, certainly sort of, you know, change my headspace about it in terms of, okay, well, I've got to stop treating this like I'm on land right now, I'm in a boat.
Which changes the way we make decisions, isn't it? Changes the way we react to different situations. I like that analogy. I might use that.
Yeah, actually, I'll post for you guys. I'll post that podcast up on a lead agent, because I think I did send it out to our contributors yesterday in the marketing brief, but it was a really good 50-minute listen, but well worth it, because in Seth we trust. Yes. Now, for you guys that, so we're going to wave goodbye to our Facebook live stream in a moment, but for you guys that are still hanging around on the Zoom webinar, we've enabled, you know, we've enabled you to come off mute and onto video. So yeah, so if you want to hang around and we can say hi over lunch. There's no lunch in here at the moment, but, you know, like if you're sort of lacking a bit of company and want to hang with me for another, you know, 15, 20 minutes, I'm happy to stay online. So, so yeah, so we'll wave goodbye to Facebook now. Bye, Facebook.
Bye.